Good morning. It is Tuesday, July 31st, and it is it's really rather early. I'm not usually up here this early. 7:28. It's 7:28 a.m. Good morning. It's July 31st, 2012. And I'm headed out to Hope today with the gang. We're going to the Warren County Fair down in Phillipsburg, New Jersey. A real 4-H event. And before I go and spend my day doing that, I have to read this little piece because I'm not in favor of Mitt Romney being president of this country at all. I think it'll just be too dull and uninspirational, and I don't think it'll be good for business, which is very important to me. I don't think it'll be good for the people of this country, which is very important to me. And I don't think we'll raise enough taxes. And history has shown, oddly enough, that in high tax periods, the economy works great. I don't know why, but it's just true. Back when there was the highest tax rate at one point was 94%. That's awfully high. The country was still doing very well, much better than it is today. So I'm just have to read about Mitt Romney's Financial Mysteries by Michael J. Graetz, Graetz. Pressure is mounting from Mitt Romney to release more of his financial records. Yes. Mr. Romney has made public only his 2010 tax returns and has said his 2011 documents will be released soon. That's all that's necessary for people to understand something about my finances, he said recently. He is simply not enthusiastic, he also said, about giving the Obama campaign hundreds or thousands of more pages to pick through, distort, and lie about. Now, he's calling the Democrats liars. Can you imagine such a thing? How could anybody accuse the Democrats of being liars? But it's a good bet that Mr. Romney's vetters have picked through more than 2 years of returns of his vice presidential contenders. And the Senate typically requires more for confirmation to a cabinet or even a sub-cabinet post. Until Mr. Romney recognizes the right of voters to understand the finances of their leaders, all we are left with is speculation. All we're left with is speculation. You know, it's going to probably rain today. Probably going to be thunderstorms. We're supposed to go out to Hope. Well, it'll be fun anyway. I like that. Some commentators have suggested, for example, that, like tens of thousands of other Americans who have taken advantage of an Internal Revenue Service amnesty, he might not have declared and paid taxes on his Swiss bank account. Oh, he might not have paid taxes or declared. He might not have declared and paid taxes on his Swiss bank account. He might not have declared and paid taxes on his Swiss bank account, and that would be terrible for him. That would be terrible for him. We certainly don't want it. Anybody who has a Swiss bank account is not paying his taxes. That's not very American, is it? No. I mean, I pay my taxes every year, and it comes to thousands of dollars every year. I mean, many thousands. And I gleefully pay it and send it to the government. Here, take my money. But Mitt Romney apparently has other feelings. Is this who we want as our president? A man who's afraid to pay his taxes? Some commentators have suggested, for example, like tens of thousands of other Americans who have taken advantage of an Internal Revenue Service amnesty, he might not have declared and paid taxes on his Swiss bank account. I can't imagine that he would have engaged in such blatant tax cheating. He is far too smart for that. Is he really? Another suggestion is that in 2009 he paid income taxes significantly below the 13.9% he paid in 2010. 13.9%. This is more plausible and potentially more damaging politically, even if perfectly legal. 13.9%! My God, man! 13.9% here in New York. I'm in 26% bracket, 27% bracket, and then I pay 8% on my state taxes, and 4.5% on the city taxes. 12, 20, that's almost 40%. 40%. Do I hear the Star Spangled Banner in the background as I talk? Yes, I do. Yes, I do. What a good American I am. Or what a fool I am. 13.9% Mitt Romney paid. My gracious goodness. He doesn't like to pay his taxes. After all, the 1 year's tax returns that he has released raised doubt about his campaign's claims that his offshore accounts did not save him 1 penny in tax. Putting business assets into an individual retirement account invested in a Cayman Islands corporation allows Mr. Romney to avoid the unrelated business income tax, a 35% levy on at least some of his IRA's earnings. A tax that he would have had to pay if his IRA were held directly by a financial institution in the United States. He would have had to pay 35%. With an IRA account of $20 million to $101 million, the tax savings would be more than a few pennies. It would be $35 million. No, it wouldn't. I don't know what it would be, but anyway. The IRA, what's the IRA, the Internal Revenue Association, IRA. I guess IRA is that is your pension plan that you put money into. I guess that's what it is. We'll check it out. I guess I had an IRA. It's up in the thousands, several thousands. His financial disclosure further reveals that his IRA freed him from paying currently the 35% income tax on hundreds of thousands of dollars of interest income each year. Given the extraordinary size of his IRA, we have to presume that Mr. Romney valued the assets he put in his retirement account at far less than he would have sold them for. Otherwise, it is quite a trick to turn contributions that are limited to $30,000 to $50,000 a year into the $20 million to $100 million he now has there. But we cannot be certain. His meager disclosure of tax records and financial information does not indicate what kind of assets were put into the IRA. Oh dear. Oh, poor Mitt. Poor Mitt. Mr. Romney's Cayman Islands and Bermuda corporations also probably, listen, my father had Bermuda corporations. He tried to have them. And they were tax dodges all the way. And the government went after my father's tax dodges and got every penny. And my poor daddy died broke. He told me, don't go into music. I should go into his business. I didn't do it. And now, I'm almost at the age he was when he left us, and my situation is far more stable than his ever was. I'm sorry, Dad, but music was it. I should have stayed in music, and I did. The reinsurance business, that wasn't it. Anyway, Mr. Romney's Cayman Islands and Bermuda corporations also probably allowed him to avoid limitations on deductions for investment expenditures that would otherwise apply. I don't know what that means. So we don't need any more tax returns to know that Mr. Romney is an Olympic-level athlete at the tax avoidance game. An Olympic-level athlete at the tax avoidance game. Rich people don't send their money to Bermuda or the Cayman Islands for the weather. Oh, rich people don't send their money to the Bermuda or the Cayman Islands for the weather. Moreover, we have no clue whether Mr. Romney paid any gift tax on transfers now valued at $100 million to a trust he set up in 1995 for the benefit of his 5 sons. Oh, those lucky lads. That's $20 million apiece. I could do well. I could live on $20 million. I really could. Until this year, the federal gift tax had a lifetime exemption of $1 million, and it taxed gifts in excess of that amount at rates between 29 and 44%. 29 and 44%. Now you're talking. A gift of $100 million to one's children could, therefore, require paying a tax of as much as $29 million to $44 million. Did he pay it? Did Mr. Romney pay that? But every good tax professional knows that gift tax returns are rarely audited except after the transferor's death. And normally the IRS cannot challenge such a return after 3 years from its filing. But if the values of the gifts were not properly appraised and disclosed on Mr. Romney's gift tax returns, a challenge may still be possible. If he did not file any gift tax return, he would still be liable for the tax plus interest and penalties. Oh golly. Woo. The writer is a professor of tax law at Columbia, was the Deputy Assistant Treasury Secretary for Tax Policy from 1990 to 1991, and an assistant to the Treasury Secretary in 1992 under the first President Bush. So this guy sort of knows, I guess, what he's talking about. Oh my. Based on his aggressive tax planning revealed in the 2010 returns he has released, and his approval of a notably dicey tax avoidance strategy in 1994 when he headed the audit committee of the board of Marriott International, my bet is that if Mr. Romney filed a gift tax return for these transfers at all, he put a low or even zero value on the gifts, certainly a small fraction of the price at which he would have sold the transferred assets to an unrelated party. Otherwise, he should be happy to release his gift tax returns. Happy. Here are my gift tax returns. I have nothing to hide. But he's not going to do it. According to a partner at Mr. Romney's trustees law firm, valuing carried interests such as Mr. Romney's interests in the private equity company Bain Capital at zero for gift tax purposes was common advice given to clients like Mr. Romney in the 1990s and early 2000s. If detected, undervaluing large gifts to one's children could provoke large penalties from the IRS. These are the kinds of tax penalties that even multinational corporations try to avoid because they fear how the public would react to the adverse publicity that would inevitably follow. Oh my. Oh my. To settle these questions, Mr. Romney should release his gift tax returns or other documents showing how he valued his transfers to his family's trust and to his IRA, and at least 3 additional years of income tax returns. No one should begrudge Mr. Romney or his family the wealth they have earned. But if he has not paid the taxes that apply to transfers of such wealth, this should concern us all. After all, who do you think pays for the shortfall? Who do you think pays that? Not Mr. Romney. Me, the bass player in New York, shoveling out 40% of his earned income in taxes. Oh, it's a cruel world. Mr. Romney, please, let us see your taxes. Let us know what an honest man you really are. What an outstanding American citizen you really happen to be. Okay?